Netflix stock is crashing, and I'm going to tell you why, plus if it's a good time to buy. I'm also going to go over the general stock market and my $100,000 challenge, week 59. Let's get into it. All right, everybody, if you can, give me a like and subscribe. It really helps my channel, but let's quickly get into this. I don't want to waste your time. Is Netflix a buy after the crash? Going to go over the stock market's performance and my $100,000 challenge, week 59. So is Netflix a buy? If you didn't know, it went down about 7%. It was over almost $150. And now it's $70 basically, right? It has gone down, it's gone off a cliff. I don't like to use that phrase because I actually fell off a cliff, but it's gone off a cliff. The income statement, they just released their earnings. I give it a B grade. Now, I'm going to go over exactly why. This is their revenue, went up 15%, right? And the cost of revenue went up 13%. Not crazy, right? And their actual operating income went up 14%. So that's okay. Their net income, which is basically your profits, went up 44%. And then their EPS, their earnings per share, went up 46%. So well over their revenue and operating income, right? So that's always good to see. They also are the biggest global streaming service, right? They have over 300 million subscribers or whatever. And then we have Amazon, Disney, but Netflix is the leader, right? They're the absolute leader. They operate in over 190 countries. No one beats them. They're the clear number one. They also people refuse to cancel high utility services that offer significant convenience, right? Like a Netflix or an Amazon or Spotify, these things that give you good entertainment for very cheap, right? So people don't like to cancel those because instead of going to the movies and going out and doing this for just $12, $15 a month, you can have this for a full month, right? You can have good entertainment. And now Netflix is getting into other things like sports, live sporting events. They have games and stuff on there. So they're still growing what they offer. And again, this is their pricing. Now, as you can see, it's continued to go up over time. You know what else has gone up over time? Their subscribers. Them going up in price will never really be a reason why people leave. They even offered, now they're charging for the ad supported, right? Now now you get charged for the ads, and it's like, but people still buy that, right? Because it's slightly cheaper than this. So, you're paying $20 a month, and that's okay compared to going out to the movies. Just one person is at least $20 now, right? The revenue continuing to go up. Now, this is how, the growth rate. Now, earlier, about 10 years ago, 8 years ago, the growth rate was higher compared to what the years were before, right? They were growing at 30, 32%, in the 30%. But as you become a bigger business, it's harder to keep growing at those rates, and so the rates continue to go down. Now, it hit pretty bottom in 2022 and 2023 when everyone knows, if you do know about 2022, inflation and interest rates, all that stuff, it was a mess. Most stocks went down. A lot of companies went down in revenue. As you can see, they didn't go down in revenue. Their growth rate just went down. They're continuing to go up. Now, as you can see, over the last couple of years, the growth rate has gone up. 2026 is estimated to go slightly down, which is, again, why the stock has been crashing. But I don't have a problem with it. You could have bought this stock in November of 2021, right? And it fell 75% in 180 days. All right, this is November of 2021, and it fell 75% in 180 days. Now it's down 48% in 380 days. This is a long, drawn out, over 1 year this thing has been falling, right? It's just been continuing to fall, except for this little spot right here. Other than that, really just continued to fall and fall and fall. I have now opened up a position here. I believe this is a good spot. Even if it goes down to here, I will continue to buy it as it goes down. But I do not believe Netflix is going to continue to go down this route, this path, because look at how it was in the last 15 years. It's only had four times, and that's including this one, only 3 other times where it's gone down this much. Actually, 44% wasn't even, that's less than this, right? And it took 140 days, 180 days, 180 days. This is 380 days. This is a lot longer. And I think it's about time Netflix bounces back up. Obviously, they got put in their numbers, but that's why I don't like to go all in. If this stock continues to fall, I'm okay with it because I will continue to buy. And then as it eventually pushes back up, I'll continue to buy a little bit more, and then I will have a filled position that will eventually increase. So I don't like to go all in right now. Now, granted, I could be timing the bottom, but the chances of me timing the bottom right now are just not there. I'm more than likely too early, right? If I'm right here, I got right here. I mean, I didn't get down here, but like, is this really the bottom? No, it's probably going to go down for another week or two, maybe another month, but I will buy more. So if you remember, their revenue was going up about 15%, but their net income was going up 44%. So I did some projections. Now let's say their revenue growth is going up just 10%, and the net income growth is going up just 20%, right? That's half of what it was. This is what their share price should be if their PE is between 20 and 30. You're looking at a CAGR, which is a compounded annual growth rate, of 23, 22, and 22% at minimum. Now, if you offer me a 20+% CAGR stock that seems like a top dog in the industry, I'm probably going to look at that with a lot of consideration. Netflix is the top dog. They are the top dog in streaming. Yes, they have some problems, as well as every streaming company does. Disney does, Apple does. I'm with Fox Sports. We have our own issues, right? But at the end of the day, Netflix is the top dog in streaming, and they are one of the best at what they do. So I believe that they can keep these numbers, which I think are kind of conservative. If they can just keep these numbers, then I don't think it's much of an issue. So I do believe that the stock could reach $200 in a few years, in 2030. So that's what, like 3.5 years. It could also just go up to 151, but it's still 22% from here every year. And which that, again, if you do the math on a compounded annual growth rate interest calculator, like, it's just 20% is amazing. This is going to be me, right? I'm just going to be buying as much Netflix as I basically can. But I do also have other stocks that I want to build positions with. So just going to build slowly and surely. Stock market update. What's been going on in the stock market? So this is the S&P 500, right? It is down 2% since June 2nd, but it's up 18% since March 30th. As you can see, we're starting to kind of like funnel in, right? We're starting to kind of pinhole the market a little bit. I mean, of course, it's going to keep bouncing. It's going to do this, but I just wonder how long is it until we reach all-time highs and stay at all-time highs? When are we going to hit that? We're down 6%. This is the NASDAQ, down 6% since June 2nd, and we're up 23% since March 30th. So, we're doing all right, but again, we're still down over the short term. This is everything is pretty Christmas lights. It's a mixed bag, except for electronic technology. As you know, a lot of tech got hit hard. I own TQQQ, which is a 3x inverse, or a 3x leveraged index. So I got hit pretty hard on that one. So yeah, if you're into the tech, into the NASDAQ and all that, you probably got hit hard. Apple's the only really winner out of that this week. Investors, this is the AAII sentiment survey. So we have about 45% bullish now, right? The same as about, a month ago. 45%, that is well over our historical average. We're at about 33% here, and 31% is historical average. So now the bulls are all basically kind of where they usually are. The bears are where they usually are. The bulls have taken away from the neutral. Usually it's about 31.5. Now we're at 22. So the bulls have really taken all the people who were kind of on the fence. Now they're bullish, which is always interesting because when the market seems to go down a little bit, yes, it does get bearish, but it's funny on how the market's been going down on the short term, but yet we're becoming more and more bullish. As you can see, we went from 31 to 36 to 45. But emotions, can also run the stock market, and we are fearful. A week ago we're neutral, a month ago fearful, a year ago greedy. So again, should you be greedy when others are fearful? Yes. Should you be fearful when others are greedy? Yes. Doesn't mean that we're at all, the market's going to continue to go down from here. It doesn't mean it's going to continue to go up. It doesn't mean anything. It just means that the stock market is very emotional, and you got to be prepared for that and just understand that and plan accordingly, because it will push the stock market. Now, last week, again, we had the AI tech sell-off. NVIDIA, Micron, Applied Materials, they all got hit hard. Even Google got hit. It was a bad week for all of them. They're all looking sad, right? Chip shortage, supply chain bottleneck, equipment delivery delay, all kinds of stuff's been going on. Geopolitical tensions, right? We have more military conflict going on. It sent oil up, right? So we just got more conflict happening, right? Just more stuff happening. And we also had some mixed earnings. Now, we had some great Wall Street banks. They presented their earnings, reported their earnings that were very good. But Netflix did not, right? It sank over 7%. Because the revenue fell short of their lofty expectations. So again, it's like Netflix is still making plenty of net income. They're making money. They're growing their revenue. They're doing all this stuff, but it just wasn't up to their expectations. And so you're going to drop this. I mean, hey, you know what? Eventually it will become to their expectation. It'll be way lower than it'll be, all of a sudden they'll be like, wait, why are we expecting so low from Netflix? We should be, or expecting so much from them, or I don't know how they're going to flip it, but eventually they're going to be like, wait, this is crazy. And the stock is going to flip eventually. That's going to happen. So next week, we have to look at a lot of earnings, big earnings. We have Google, Tesla, and Intel. There's a lot going on, right? So here we got Google, Tesla, and Intel. They're walking into earnings season all happy, right? Let's see if they walk out of it happy. We also have GM, Honeywell, 3M, Northrop, Capital One, American Express, right? We have a lot of earnings going on, and then a lighter economic data slate. So, we'll see about the S&P Global Flash PMIs, and then the housing market as well. So this is not really going to push the market, and with the earnings, this isn't going to do anything, right? So let's go over the earnings, which, I circled Domino's because that's kind of one that's retail, but there's just so much in here that we can go over. The big dogs, we're talking Tesla, Google, ServiceNow, IBM, Intel. These are some big dogs that are going to be reporting. Wednesday is a huge day after hours. So if you're looking to watch the market on one day next week, Wednesday is the day. Thursday might be a day to start buying, though, on some of these, depending on what happens. All right, now let's get into my $100,000 stock market challenge, week 59. All right, so I am at $9,801.48. I was down 2.5% on Friday. That is no bueno. This is my portfolio currently: HIMS, TQQQ, Celsius, Meta, Amazon, CRM, Now, MU, and Netflix. I added Netflix. I bought one share. I bought it at $69.15. I have now officially opened up my position in it. Again, I put my money where my mouth is. Every single stock I said you should look at, you should watch, possibly buy. I don't give any financial advice. So I'm not going to say you should buy, but I will say, oh, hey, buy, because I think it is a buy. Any of those stocks that I have said, I have put my money where my mouth is. Some of them I have lost my money. Some of them I have gained some money. Like HIMS, I am up, I'm up almost 50% on that right now, right? And I was talking about it when it was in the teens, it was 15, 18, so I put my money where my mouth is. So Netflix is one that I've been talking about. I talked about it earlier in this video. I made a whole video about it earlier. So I do believe Netflix is a stock to buy, and so I am buying it. I went down almost 5% for the week. That was not good. I am now about 20% away from my goal, which is now $12,300. Again, this goal is based on 20% CAGR a year, and I started at $7,354. I'm only making $50 deposits a week, and I started this challenge when HIMS was at like 52. I think it was at $52. Since then, it has gone down like 40%. It's still down, even though I'm up almost 50% on it. It's down 40% since this challenge started. So I do know once those positions finally go back up, that's going to help. But when I started this challenge, I just wanted to start the challenge. I just wanted to start it. I didn't want to wait till I thought anything. I was just, you know what? I'm going to just start it. This is what it's going to be. And so I already knew the first year or two until HIMS really makes a good push. I was going to struggle a little bit, but either way, it's fine. Also, Fubo killed me. I bought Fubo. Fubo went down tremendously and it hurt. So yeah, I am up 33% since June 2nd, but this is why deposits are very important. If you take away all the deposits, I'm actually down almost 10%, right? So that's almost like a 40% swing right here. And that's a big difference, right? So having those deposits really helps these things, helps your portfolio grow, even if it's little. I mean, it's $50 a week for me. It could be $10 a week for somebody. It could be $15, right? It could be $100, whatever you want. And so this is where I'm at right now. It's week 59, not where I want to be, of course, but it is what it is. Again, here's just my, I bought Netflix and I also put $50. This is a retirement account because this is a long-term play. I do have personal accounts. So thank you for watching. Please give me a like and subscribe. I do really appreciate it. It's been a long month. I just finished World Cup. Today's the 19th. I just worked about 13-hour shift or something like that. And it, it's cool. It was a good month and a half, a lot of work. Things are going to start cooling down for a little bit until I start doing the NFL and all that stuff. So I'm going to be not so stressed, hopefully, be able to make these videos for you and then be a little bit more consistent, because I know over the last month and a half or so, it has just been off. I have not been making any videos, and so hopefully I can get back to supplying some news and updates to people. If you're even still watching this, honestly, if you are, I really appreciate it. If you're watching this, please give me a like and subscribe. I mean, you probably did already. Yeah, thank you for watching. I appreciate it. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.